Happy Monday, traders. It is 8:01 a.m. Chicago time on Monday, the 9th of September 2019. Thanks for being here for episode number 1591. We are just 9 episodes away from 1600. 1600. I wonder what kind of a party we should have on that Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You guessed it, risk on overnight. We have a market that is popping higher. Some interesting parameters here. The bonds are off an entire handle, down a handle and 3 ticks. The Bund is off 60 ticks. Um, and what we see is that crude is leading the pack at $57 on the October contract, up 48 cents or 0.83 or 0.85%. But cable is higher and gold is higher today. Gold's trading at $1,521.40, $6.50. So generally, when we have risk on, we don't have gold participating on that side. I expect that to be flat to off, but this looks like a technical move to me. The S&P is gapping up. Um, it took out the 2990, which, by the way, has had liquidity there for quite some time. When I look at full depth on my platform, I'll show you that in a bit. The size that was there has been there for a while, and we've been stuck there for some time with the overnight high in the S&P at 2991.50. So overall, risk on the market is the market balanced on Friday. Um, we ended up with an inside day on the S&Ps, and now we're breaking higher. So this could be another gap and go situation. We'll see how it plays out on the open. We've got a couple of gaps beneath us, which so the structure to me overall seems like it is getting a little bit ahead of itself just from an auction perspective. We generally don't like to leave a vacuum behind, and gap zones are vacuums. So that's what we've got in terms of the overall market and the sentiment and all of that. Um, the market's edging higher as investors hope for a stimulus that is expected from the world's central banks to support slowing growth. Remember, we have FOMC on the 18th. The market really looking uh, is really looking for around 50 basis points. I think the last I read on the FOMC in a couple weeks. Um, there was a surprise rise in German exports, which supported European shares. The Japanese shares hit a 52-week closing high, or a 5.5-week closing high. The Trump administration has said that they are very close with on a deal with Japan. The euro fell against the dollar ahead of the European Central Bank's policy meeting this week. Gold edged higher, crawling away from a 2-week low. Oil prices rose after new Saudi Arabian energy minister confirmed expectations there would be no radical change in his country's oil policy. That's the overall picture. Let's look at the calendar for a minute. What is up? We do have, it is Monday. We generally want to review the entire week on Monday. This evening, we do get the inflation rate from China. That comes out at 8:30 Central PM, 9:30 Eastern. Expecting 2.6 out of China. Tomorrow, we have the claimant count out of the UK, comes out at 4:30 a.m. Eastern US time. Thursday, inflation rate from Germany, uh, the ECB rate decision and press conference in the morning. We get the inflation rate from the US at 8:30 Eastern on Thursday, and we get on Friday we get retail sales and Michigan sentiment prelim. Pretty light week, relatively light week overall. We do have a heavy Thursday, but overall not too crazy. One thing I want to remind everyone is that the Monday after NFP Friday, I did a study on this a while ago. The Monday after NFP Friday tends to be pretty lazy. Now, I've noticed that the last I'm not sure if it was the last month or the month before. I was quite wrong in that we ended up with a Monday that moves around. But in general, if you look at the historical ranges, you can use ATR, range, rotational factors, things like that. Um, the Monday after NFP, the numbers show that historically generally doesn't bode well for movement. So just, we do have a gap which tells us there's an imbalance in what is perceived as value today. So we may see something special today, but just my point is be kind of be on the alert and don't get sucked in, be picky. One thing I want to take a moment to announce, um, the this is rollover. This is rollover week. Next week's expiration week. The U.S. indices rollover this Thursday morning. So I'm going to come in on Thursday with December numbers. So I will adjust all my charts and adjust my historical data, scrub it, all that good stuff on Thursday morning. Actually, Wednesday night. And then we'll equalize the sessions. I will post here as an announcement what the equalization premium is for various products. The U.S. products, ESNQ, EMD, RTY, and YM. And from Thursday onwards, even though not everybody rolls, a lot of the folks like to roll on Friday or Monday, but I do roll with the official roll date. And just to keep things simple for my charts, because my data feed rolls at that point, and it doesn't make a difference to me. The liquidity will be there, although the volume will be lower. As I always tell you, that in general, we do not rely on the delta from rollover day onwards. And the last rollover into September back in June, the pace of the roll was made it so that the roll was pretty much done by Wednesday of expiration week. Next week is expiration week. We'll have quad witching Friday. Just keep that in mind. So back to business. I'm gonna start out by looking at what was expected on Friday in our review segment. I'll keep this as short as I can. Friday's primary scenario is that we were opening in the upper end of Thursday's profile. Thursday's profile was completely balanced. We want to pay attention to the point of control, especially, and the value area. And so the expectation on Friday is we're likely to move back down to the prior close, which was 29.7150 or so. And then likely to hold and then turn up, impulse up, and potentially challenge the high. I was not surprised that Friday was an inside day. Here's a look at what actually happened. I can show you the entire Friday. This is how poor the rotations were, or how sparse they were. The entire day can be shown on one chart, on my trigger chart. Here it is. It opens, and what does it do? It comes back to the close. We missed the close by one tick, I think. No, a couple, 3 ticks, I guess. It almost got back to the close, but this is what was expected initially. We would move back to the point of control. We did. We had a small bounce there. It wasn't much to write home about, just 2 points. And then it consolidated at the point of control, which is expected for those of you who've been following around and who may have seen the webinar series. We expect this behavior, and then it moved back to the prior close, 71.50. It bottomed out at 72.25 by 3 ticks, and there's your impulse right there is drawn. Here's the drawing again. Okay, move back, hit the close, the orange line right here, and then you get an impulse right there, the green line, impulse right there, consolidate and start to shift up. So you could see that it worked out pretty well. We just could not take out the high. Friday's high was also 3 ticks from the top, so I missed it by 3 ticks on the low and 3 ticks on the high, and we ended up with Friday being a relatively balanced day, and there's just not much more to it. This is quite typical actually of non-farm payrolls day. We tend to make our move in the morning. Non-farm payrolls was not a huge move. It triggered off at 29.8450, and it dropped to, I forget what it was. It dropped just a little bit, and then it ended up moving back up again. Nothing gigantic there. From there, we move into the overnight session. Here's what we've got for the overnight session. Generally, a relatively balanced session with a kind of an upward skew, and the point of control resting in the middle along with the VWAP in the mid area at Friday's high, and we've been squeezing this high higher and higher and higher. So the overall condition in the overnight session is saying that there's likely to be a bit of a lack of interest, in my opinion, in this morning's auction. We'll see if I'm wrong, but reading what's in front of me, and that's all I can do, and seeing 160,000 contracts traded in the overnight session. Remember last week we've had 300, 350, 400, 420,000 in the overnight session, a fair amount of activity. And today we have basically a complete box here in terms of a long-term zipper on a 15-minute chart, and we're pushing higher. I'm not expecting too much here. The low is quite healthy. The low seems to be a good low in the overnight session, and we've spent almost the entire session long. So inventory is long. We're likely to revert back just a bit. Probably at least I expect a tag of the high, the prior high. So at 29.8575 at least. So that's what I'm seeing so far. I mean, look, I'm not trying to be pessimistic or whatever. I have quite low expectations for today. And for those of you who are at Convergent, don't expect too much activity, at least from me in the head trader channel. It's just I'm not here to entertain, and I'm not interested in creating noise when the market's quiet. So this may be a good day to clean some things up, catch up on some studies or refresh some studies or whatever. That's my expectation at least. But I'd love to be surprised. I'd love to find out that I'm wrong so I can press the other way. But I do expect a bit of a reversion back towards this 85.75, which is the mid of the session and the overnight point of control. There's a high probability that the overnight point of control is likely to be tagged during the um, um, day session. Drew a blank there. Okay, so let's look at the overall order flow for a minute. This is ctbookmap.pro. Here's the entire session. We open back here, my time here in Chicago, 5 p.m. on Sunday night. And as you can see here, there's not much to talk about except that this size has been here for like 4 days, I think. If you have full depth, you would have seen that there was size here at the 29.90 and we took it out. This morning we've flirted with it several times, nice collisions. There was some size that came in right here and offered in front of it and ended up bouncing back, but it moved back far enough that it can make a run, and we are pushing these kind of fluffy kind of liquidity areas up above. I mean, we're within earshot of 3,000. And as I talked about over the last 2 weeks, maybe, we are likely to start squeezing higher. Liquidity below us, stable liquidity below us is at 29.80, which matches with the prior close. So that may see a bounce if we get back down there. Again, I'm looking for the high of day to be tested at some point. And the question is, does it find a base to rotate up from, or will it fail at these lows and start making its way to the prior day's close, a point of control and close? Notice the point of control has been around the close a lot lately. Up above, into 3,000, just as you would expect liquidity to be sitting here stable. It's a millennial figure, and and that's you know, that's common. So the next liquidity area above 29.95, again, with the quad witching Friday next week, we're going to see more and more large offer, large bid activity. And as you probably noticed, if you've been trading futures for a while, volume increases relatively dramatically um, on rollover and expiration. So expect a lot more to be in the book in terms of liquidity and so on. What are we expecting for today? Let me prep this screen here a minute in my one-man studio. What do we have today? ¿Dónde vamos? All right. So we are right up against that overnight high. So the overnight stat's not expected to survive very long. The expectation is we're likely to continue to squeeze. Why do I think it's likely to continue to squeeze higher? It's because we have not put in an excess high. We have not backed off of that high. It's a weak high overnight, and so I expect it to get squeezed some more, and it's likely to push into that 29.93, 29.95, and then I'm looking for a reversion back, and I'm looking for the high to get tested. Now we have a double top within ticks of each other right up here, so this is a kind of a primo test area. Bounce back up, and then I'm expecting on scenario one, I'm expecting us to fall back down, and then that's all she wrote, back to the point of control at 29.82 or so, and that's all she wrote. This is a lot more range that I'm expecting, 29.95 to 29.82. That's a lot more range that I'm expecting for a Monday, but that's how things are setting up right now. Again, volume overnight was pretty dry. Expect it to carry into the day session. Secondary scenario is an open that pushes up, brings us back down, holds this high, and then starts to move up and squeeze into this 97.50 area and potentially 3,000 before it rests. If we do get to 3,000, there may be some turbulence there. And then scenario two is more bullish, a gap and go kind of situation. Not as probable as scenario one where I'm expecting reversion. These 2 days are balance days. I mean, you could throw a composite, a micro composite profile around, and you could see 2979 is the MC point of control, but a relatively balanced and meaty profile over these 2 days. I expect that to be a magnet for scenario one to push down. Scenario one can, if it's not able to hold the point of control, and we do get a little bit of range expansion, can test this this 79 area, 79.80 area before it bounces back up. So what am I looking for today? I'm going to sit out the first 15 minutes. I'm going to use the first 15-minute bar. If you look down here, I've explained this pain before. This is the volume. The black is the 20-day mean, the 20 trading day mean, 20 session mean for the day session for that time slot, and then the bar that's superimposed on it is the actual. So I'm going to take a look and see the first 15 minutes. As I talked about on Friday, I was expecting the volume to be kind of lackluster, and we did get that. You can see the actual volume. There are a lot of black little nubs pointing up. So I'm going to wait for the first 15 minutes and I'm going to wait for it to kind of set itself up. And I want to take a look at the volume and see what it's trying to accomplish and then step into it. The goal here is to let the market decide and then we step in as opposed to us, you know, getting a hunch over what it wants to do and getting in because it's hard to have a stop on a hunch. What level does a hunch become wrong? So wait for the market to tell you and then jump in. Good luck today. I'll catch you tomorrow morning. Take care.